And business editor Richard Southern joins us now. Richard, happy Friday. Nice to see you.
Adrian, how are you, my friend?
I'm very well. I'm very well. I see that you're looking into the pandemic bounce back today. That's our first item we're looking at. And Canada is slowing down a little bit on economic growth.
A little bit. Got the October jobs numbers in today, Adrian, and Canada created just over 31,000 jobs. So, good that it's a positive number. Not so good that it wasn't as good as expected. Economists were thinking we'd see like 50,000 positions being created, but just 31,000. So the thinking here is maybe we are starting to see the COVID economic recovery slow a little bit. Still, Canada's unemployment rate dropped to 6.7%, the fifth straight month that declined. We are seeing a rebound for the retail sector. It created 77,000 jobs in the month. As for why the headline number wasn't as good as expected, Adrian, economists point to two factors. First of all, the labor shortage. We've talked a lot about that's contributing. As well, Alberta, Saskatchewan, and New Brunswick, they've had trouble containing the COVID situation this fall. That's also hurt the labor market. You know who wasn't concerned, though? Investors. Adrian, the TSX closed at a fresh record today, as did the Dow, the S&P, the NASDAQ. So stocks were hot, regardless of this number.
Wow. Now, it's been 3 years since weed was made legal here in Canada, and many predicting mile-high returns, though some companies, they're struggling to turn a profit.
You've done some great stories in City News where you interviewed a drug dealer and you had him in the
talking
shadows.
to the underground to see how it was impacting them. The underground's still going strong, but it seems like the legit companies, some of them are still struggling.
Well, that's it. I bring that up because it is those drug dealers, the black market, if you will, that is still taking a lot of market share away from the big companies. Big companies in this sector, Adrian, still not making any money. We heard today from the biggest, Canopy Growth. It lost another $16.3 million in the last quarter. It pushed back its profitability target. It pointed towards that black market we were talking about, but it also said, Adrian, that it's not making the right type of product that consumers are looking for. Notably, stronger pot. Canopy Growth said Canadians are looking for higher THC cannabis. That's the active ingredient in cannabis. And so it's going to change its shift, and it's going to offer stronger cannabis, stronger pre-rolled joints and vapes and edibles. Investors are concerned, though. Canopy Growth stock down almost 12%, dragging the rest of that sector lower today.
Well, one thing, speaking with some executives from companies like Canopy, they're saying as well in provinces like Ontario, their packaging is really restrictive. And when you look at the black market that's able to sell a stronger product that they can't sell
and
on the legal market.
And a cheaper product on the black market too, Adrian, yeah.
For sure. Now, for those who have been back hitting the gyms, it sent one company's stock rolling downhill.
Backpedaling, if you will, Adrian. Peloton. Do you have a Peloton? Are you on the bike?
I do not have a Peloton, no. I have a CCM. I ride around my neighborhood. It's about $100.
There you go. But look, Peloton did so well during the pandemic. The stock surged because everyone was locked down and they got one of the bikes or the treadmills to work out at home. Now you can go back to the gym, and now there's competing companies that are offering similar products for cheaper, and so that's not good for Peloton. It reported a loss of more than $370 million. The stock was down 35% today, Adrian.
A little bit cheaper to go to the gym, too, than that expensive Peloton. Thanks so much for joining us, Richard. That's business editor Richard Southern.
Thanks.